Hello traders, Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. If this is the first time that you're watching this video, I want to welcome you and thank you so much for tuning in. If however you're part of those people that are now used to the kind of videos that I put out every weekend, I also want to thank you for your continued support. And like always, if you like what you see at the end of this video, then please by all means hit that like button, share it, subscribe, or anything that helps really. So anyway, in today's video, I've got two currency pairs that I want to analyze, the Aussie dollar and the euro against the Swiss franc. And I've also got the results of this previous week trade signals that I sent out to show you guys how it's going. So anyway, let's head over to the charts. So I'm going to start with the Aussie dollar, and I'm looking at this chart on a daily time frame. So we can see that the market, it doesn't take a genius to tell you that this market is bearish. But let's try use a bearish structure rule to kind of make things technical. So looking at starting with that impulse leg, actually I'm going to extend it all the way to the top. So looking at that impulse leg, we had a retracement. It was a wasn't a huge retracement, just a little bit retracement, and then we had another move, and we had a retracement. So at this point the market put in a bearish structure because we had an impulse leg, initial structure low, outside return, new structure low, break and close below the initial structure. So we got a bearish structure. We would expect this market to continue being bearish, and that's exactly what the market did. And we had another bearish move. The market rallied, came back into the previous structure, and we had another bearish move. So if I and the market kind of came into a little bit of consolidation, I'm actually going to extend this impulse leg all the way down here. And then we had a rally in the last few weeks back into that previous structure. So if you look left, we can see that the market has come back into this previous structure. And if I actually bring in my RSI, we can see that we have an overbought conditions on the RSI. So this is going to present us with a very, very nice opportunity to try and get short. But does that mean that you should get short? Well, technically it's going to be a good trade. If you get short in this market, this is where your stop loss is going to be. Your stop loss is going to have to go above this previous structure high. And if you do that, you are going to have a favorable risk to reward ratio, a 1-to-1 risk to reward ratio, which is good. But there are other ways that you can actually there are things that you can actually do to kind of boost that risk to reward ratio, because after all, that's what trading is about. Guys, the most important thing that you're going to hear a lot of traders are going to tell you is having a very, very good risk to reward ratio, because in the long run, I can't even stress how important that is. Because having a good risk to reward ratio is everything in trading. It's not everything, but it's gonna account for a lot. Because guys, at the end of the day, if you're gonna trade, even professional, no matter how good you are in trading, professional traders, at the end of the day, you're gonna have a winning percentage of anywhere between 50 to 65%. So as we can see, it's not impressive, but you can have a winning ratio of between 50 to 65% and still be profitable consistently. And the only way you can do that is to have a very, very good risk to reward ratio in your trade. So in other ways, you can say all you have to be in trading, you have to be very good at being average. I know it sounds stupid, but that's what it is technically. You have to have a winning ratio. If your winning ratio is going to be between 50 to 65% in the long run, then that tells you that you have to be able to have a very good trade selections that have very good risk to reward ratio. Because the thing is that you can go out there searching for traders that have winning percent of 70-80%. The truth is, and I'm not talking about just having 10 trades, looking at 10 trades, the result of 10 trades, having 7 wins and 3 losses. That doesn't count. You have to take hundreds of trades to be able to look at that winning ratio, and the importance is always gonna come back down to how important your risk to reward ratio is. So looking at this trade, back to this trade, we can see that if you're taking a short position here, although it's a very good opportunity to get short, but your risk to reward ratio, it's favorable, it's 1-to-1. But if you look at where your stop loss is gonna have to be, that's over from 75 to 81. That's nearly 600 pips. Just because the market the market respects structure doesn't mean that the market is going to come in and reverse on a dime. I mean, it may do that. I mean, lots of times we've seen the market comes back into structure and then just falls off a cliff really. But why do you think we we put our stop loss above this previous structure high? It's because we know that this is where we're going to be risking. There is a huge chance that the market is going to come into this, comes into a little bit of consolidation, plays around with your emotions. So if you're short on this trade, you're going to be looking, you're going to be waiting. It's going to be a long and a painful one for you. I mean, unless you like living your trades for a long time, then you can do that. But it's not really worth it. So this is the way I would play it. This is the way I would tweak it and trying to find a very good and boost my risk to reward ratio. So what I would do is, if I'm going to trade this, I'll drop this down to the 1 hour time frame. And dropping this to the 1 hour time frame, I'll look for a confirmatory signal. So I'll look for this market to maybe come in, put in a double top. So if this market comes in, puts in a double top, and gives me a bearish divergence on my RSI, then I'll be looking to take this trade. If you guys trade the 2618 trade, you will wait for this market to come back down into the 618 retracement before going back down. So you can see how easy it is. I mean, if this market comes in, puts in a double top, your stop loss only has to go above that double top. Look at how easy it is that you can boost your profit. But the thing with this method is you have to wait. There's going to be a lot of waiting game here. Or you can wait for this market to come into a little bit of consolidation, look for a bearish advance pattern, and you can use that as a method of entry for the trend continuation. Or if you trade candlestick patterns, you can wait for this market to maybe to come form like a bearish engulfing pattern, or a break and close below the previous candle, or any sort of candlestick patterns that you trade, which I don't, shooting star, hammerhead, or whatever it is. But there are different ways you can try and tweak it, but it's going to involve a lot of patience. That's what patience is sometimes it's very important in trading. So anyway, I mean, you can short the market here if you want to, and if you're lucky, the market might just reverse back on a dime, which it often does. But if you're not, then it's going to come back into, even though the market coming back into this zone doesn't mean that the market, it's going to be a losing trade. It just means that as long as this previous structure hasn't been broken, technically the market is still bearish. But whichever you look at it, I mean, it depends on your style of trading. I'm just here to throw ideas to you guys. So yeah, I'm going to be watching this because that's the way I'm going to play it. I'm going to wait for this market to drop this down to a 1 hour time frame or 30-minute time frame and try and look for a reason for getting short. So anyway, moving on to the next trade I want to talk about. Next currency pair I want to analyze is the euro against the Swiss franc, and I'm actually going to put this on the 1 hour time frame because it's not really it's just a trading opportunity that you guys might be interested in once the market opens. So I'm actually going to fatten this up and try and look at. So we can see that the euro Swiss. See, the first thing I'm going to do is I'm going to put up a support line where the market has come into a little bit of support here. So we can see that the market. So this is kind of like this on this currency pair. We've got sort of two different trading strategies that are all pointed to the same thing. So one is structure based and the other one is just advanced pattern, but both of them have the same area of completion. So we can see that the market comes, we had a little bit of support here. The market has tested this support line 1, 2, 3 times, and now it's heading back down into that support area. So the first thing I'm going to do is, we've got an advanced pattern. I think it was a Gartley pattern. Yeah, we do have a Gartley pattern that is going to complete. As you can see, it's going to complete right on that support line. So we have a bullish Gartley that will complete right on that support line. So the market is only just 20 pips away. So this is going to be a very important trade to keep an eye on once the market opens. And we had obviously if you trade structure, you would be waiting for this market to come back down into this line, and you would wait to see maybe where the candle is. If the candlestick is going to respect this support line, then you'll be looking to go long. Or whichever method you use, this is going to be the good price to enter around 109.20s. So yeah, this is definitely a trade that I'll be keeping an eye on as the market opens, as we head into the trading week next week. So that's it for today. Like I said, oh yeah, I'm gonna show you guys the results of the trade signals that I sent out this week. But obviously, first of all, before I show you guys, I'm also gonna, what I said on the Aussie dollar chat about the importance of having a very good risk to reward ratio. I'm gonna show you why that is very important. So I've sent out 5 trade signals this week, 3 losses and 2 winners. Now, it's, before you say anything, it might sound, it doesn't sound impressive. It doesn't sound impressive at all. I mean, that's a winning percentage of less than 50%. But you really have to pay attention to the numbers. The numbers is the most important thing. So I'm gonna start with the losers. The first trade that I sent out this week was we had a bullish galley on the US dollar yen. So let me bring up that chart. Dollar yen, I think it was on the 15 minutes time frame. So there it is, the bullish galley. We had a bullish galley pattern. Oops, why is this? So there is on the 15 minute. As you can see, that was when I posted a trade before the market came into the entry point, and so the market came into the filled us in on our position. We had a little bit of rally, and then the market just fell off, hitting our stop loss. We took a loss of about 39 pips on this one, and then moving on to the next one, I think it was the US dollar against the Swiss franc, and this was actually a very interesting trade, although it was a losing trade. But let me show you guys what actually happened. 30 minute, that was on the 30-minute time frame. So as you can see, I sent out this trade way before the market was triggered, way before the order was filled. So going back onto the chart, but this is the chart. So when the market came back in, filled us in on our order, the market rallied, hit our stop loss, and then reversed, hitting what would have been our target. So I mean, so you can see this is what trading can do to you sometimes. I mean, you can look at that. It just came on right on the dime. I mean, if the market came in like a pip, or if even less than a pip short, then we would have taken a winner on this trade. But it happens, simply taken on the chin, and you just move on to the next one. All the methods, all the plan was followed. That was the most important thing. It doesn't matter what happens. So moving on to the next trade, which was also a losing trade. It was the New Zealand dollar against the US dollar. This one we had a bullish cipher pattern. So let me bring up the chart. New Zealand dollar. Yep, so there it is. So on this one, I think we actually took this trade before the news came in. Yeah, so we were in this trade. I mean, I posted that trade. Where is it? This is it. I posted it way before the at least maybe half an hour before the order was triggered. So as soon as we got triggered, the market just ran. I think it was a news announcement that happened, an interest rate decision by the New Zealand dollar. They cut their interest rate to about 0.25 base rate. So that's what happened. The market just, the New Zealand dollar was just, it just fell off the cliff really against most of the currency pairs. So we took another loss on this one. I think although it wasn't a huge loss, about 32 pips on that one. So those are the 3 losses, and then moving on to the winners. So the first winner that we had was the US dollar against the Canadian dollar. So let me bring up the chart and I will show you guys. So as you can see, the last 3 losses, the first three losses that we had was about 38 pips, 35 pips, and 32 pips, which is not too. I mean, it's good as far as I'm concerned, because that's where I like to keep my losses. I like to keep my losses at the average of less than 40 pips. And if you're following my signal surfers, you would know that. I never, most of my, once I show you the result, you're gonna see it. This is the US dollar against the Canadian dollar, the cipher pattern that I sent out. So as you can see, I sent out this order about close to 100 pips before the order was triggered. I think this is one of the first trades that I sent out, and the orders didn't get triggered until about Wednesday or Thursday. And we can see that the market came in, got us filled on our order, and then it reversed back, hitting both our targets. So I think we took about 60 pips on the first target and about 100 pips on the second target. So this straight away covered the 3 losses that we had. So if you had come in, if you had signed up to my single server this week, you would have taken a couple losses. You have 3 losses in a row, and you'll be thinking to yourself, oh man, I'm losing too much. But look what happened. You just had 1 winner. This is the importance of having a very good risk reward ratio, because a winner is always going to make up for at least 2 losers, and in this case it made up for 3 losers. And then moving on to the last one, it was the euro against the US dollar, another a bullish cipher this time around. So if I bring up the chart and I show you guys, so as you can see, I sent out this signal as always, a good few actually this took about 3 or 4 days before the order got filled, because the market went back up. So if I bring up the chart, yeah, we can see. So when I posted this signal, I used that as my C leg. So if I bring in my Fibonacci retracement, we can see, yes, so even though we had a 127 extension, the market never closed above the 120, so technically the cipher pattern hasn't been invalidated. And that's the good thing about my signal ciphers. If the pattern has been validated, I will let you know to cancel your orders. So the market came a little too higher, but then I think this also happened during the Draghi speech or something like that. So the market came back in, filled us on our order. It came within 10 pips as our stop loss, and look at what happened, guys. We had a huge rally. Hitting the first target about 60 pips, and then our second target about 105 pips. So as you can see, guys, these 2 trades, we had started the week on the wrong side of the market. I mean, and as far as pips are concerned, we've started it was a bad start to the week, but then these 2 trades, turned the week into a good week. I wouldn't say it's a great week, but it was a good week. I mean, any week in trading where you don't lose money is a good week. That's just a simple fact. So anyway, back to the spreadsheet results, to show you guys what happened. So as you can see the results of the trade, the bullish Gartley, the 39 pips lost, the 38 pips and the 30 pips that we had on the New Zealand dollar cipher pattern, and the 2 winners, they're very identical. They're both cipher patterns. 63 pips on the first, 105 pips on the second target, 64 pips on the first, 102 pips on the second target, giving us a weekly profit of about 227. So far, guys, we haven't had a losing week. I mean, 5 straight weeks we've bring in profits after profits after profit. But is that going to continue? No, it's not going to continue. At some point I expect, we are going to have a losing week, and you can't, there's no way you can hide from that, because this is trading. But as long as you have a method, as long as you stick to your method, you stick to your trade plan, the good weeks are always going to outweigh the bad weeks. I mean, sometimes you might go through 2, 3 or even 4 weeks of having drawdown, taking losses after losses. But look at what happened, guys. 5 straight weeks. I mean, it's not going to be like that all the time. But if you had been on my signal service from the start, then there's no way you would be losing money. I mean, if you followed the money management plan that I gave you when you first signed up, there is just no way. I mean, I can tell you that. So looking at the equity curve, we can see, we're up on 1,000 pips for the year. So we can see that the market, we can see that equity curve has been going steadily, steadily. We've been going up. I mean, I do expect a dip. It's gonna come in. I mean, losing week is gonna come. You can't hide from that fact. It's gonna happen. We're gonna have a dip. But if you follow me, you know what it's like. I mean, we take very good in terms of the trade that have the potential to to give us a good risk to reward ratio. We stick to the plan. It's all patterns. We don't trade anything else. You're not gonna receive an email from me telling you, oh yeah, structure trade or whatever. It's all patterns. It's all advanced patterns, and it's all the bullish, the cipher, Gartley, and the bad pattern. That's what you're gonna see. On an average, you're gonna get 5 trades a week. I mean, it doesn't mean that we're gonna take 5 trades every week. I can see that. I think the last week we only had 3 trades. So it depends when the opportunity presents itself, then we take the trade. But yeah, I mean, So really the most important thing I want you guys to take away from this is the fact that you need to have whatever your trading method is, you need to have a very good risk to reward ratio. You need to focus on that. Don't even try and focus on your winning percentage. I don't even focus on my winning percentage. I focus on having a very good risk to reward ratio, because in the long run your winning percentage is going to be around 50. If you have a good trading strategy, it's going to be between 50 to 65%. And being there, you need to have a very good risk to reward ratio, very good money management on your trades for you to be able to be profitable consistently. So anyway, I hope you like what you see. Like I said, if you like what you see, for those of you that haven't yet signed up, the link to my Signal service at the bottom of this video. You can sign up and get your money management sheet, and hopefully this week is going to be as good as last week or even better, and we'll see. And also the link to my TradingView page, as always. I haven't been posted on TradingView. I think because I'm dedicating so much effort into using all my patterns, all my analysis onto my Signal service, and also for the accounts that I'm managing. I don't like to, I haven't got a lot of time on my hands to be posting on TradingView. But now and then I am going to be posting a few things. But yeah, so this is it for today, guys. Thank you so much for watching, and I wish you a good. Hope you guys have a good trading week this week. So thank you. Talk to you soon.